Good morning. Thank you for having me, Latip. My name's Kathleen Kramer, and I've been in the mortgage business for 20 years. I'm guilty as charged. I'm happy to say that in that time, I only sold 2 of those neg-am loans, you know, the toxic ones that ended up going sideways, most of them. And so today what I wanted to talk about a little bit is about the state of our industry. How is it kind of broken down now? We had some big changes in 2008 with some new regulation, and that really has changed the face of the industry. And so I just wanted to dig into that a little bit. And then I also brought along some information on what's going on with credits. Credit scoring is changing again. And so there's some new announcements, and then I have some tips on how to improve your credit score, and if you have good credit, how to keep that high credit score that you've worked so hard to maintain. So in today's business, the industry has changed a lot, and prior to 2008, we had a lot of brokers in the business, and a mortgage broker doesn't actually fund your loan. What they do is they take the information, they package it up, and then they submit it to a bank or a lending institution who then has to also review it, issue their own disclosures, approve the loan, and they fund the loan and service the loan. And what they found during the course of all the investigations that they did was that a lot of the loans that went sideways had been originated by the broker end of the business. And so for right or wrong, the industry decided to, the government decided to go after the brokers and try to regulate them out of business. And that largely is what's happened. So what you have today is you really have a majority of just the banks, and the banks have really captured the largest part of the market share in the business. And many of the brokers changed their business model to become what we call direct lenders, and that's what JMJ is. And I spent a lot of my career as a broker because I thought it was the best for the consumer for me to be able to take the information and pick whoever had the best loan program for that client. So the way that we do that now is that our company, JMJ, has credit lines. We have a $50 million credit line at JMJ Financial, and it's expandable to $100 million, so if we have a great month, we never run out of money. What we do is we have approvals with 20 different investment companies and banks, including Wells Fargo, Chase, B of A, Citibank, all the big major companies, and then some of the other boutique investors. And what we do is we take your information, we underwrite the file, we package it in our office, we fund it actually with our own money, and then the lender buys that loan from us once it's already closed. So we have to make reps and warrants to these lenders that you won't default. So how do we do that? Well, we get out our magnifying glass. No, I'm just kidding. And we check out all your documentation, and it feels that way in today's marketplace because as the lending standards have become stricter, we have had to get out more information from our clients, sourcing deposits, digging into those debts a little bit. And one of the biggest changes and one of the biggest hot buttons in the industry right now is undisclosed debt. So I thought it might be valuable to talk a little bit about credit scoring and credit in general and how that ties in, because there's really 3 aspects that you can control in the mortgage transaction process. There's income, there's assets, and there's credit. And credit is really where we have the most opportunity to help you as a direct lender through some services that we have that the banks just don't offer. And one of those services is called Credit Expert. So for instance, let's say that you come to me and we run a credit report, and there's a couple of negative items on the credit report, or we look at the credit report and we say, hey, right now you're using a little bit too much of your revolving credit, and your credit score is maybe 10 points or 20 points below where you could get that best pricing. Well, I have a tool within my credit reporting service called Credit Expert, and it's kind of like a what-if scenario machine. So we go in and we say, okay, what if I needed to have a middle credit score? Let's say I had a 650 and I want a 680 so I can get you better pricing. What if I need to get to a 680? And I run it through the system, and the system will actually, through the formulas from the credit bureaus, will actually give us a prescription, if you will. Well, this person has too much charged on their American Express card, so take $2,000 and pay it down on their American Express card. Or they don't have enough open trade lines, so maybe go open a new credit card. That could be a solution that would help improve your credit score. It's kind of funny, right? So we have used these in the last 2 years, and at some point I'll bring in some case studies when we have a little bit more audio-visual, and I can show you some case studies where we actually improve people's credit scores. We're able to consolidate some of their bills, maybe get them a little bit better financing terms, and lower their overall cash flow, their obligations each and every month. And I have had 2 cases this year where we've put over $1,000 of cash flow back into people's pockets by repositioning their debt. And so this is one of the things that differentiates JMJ Financial and my services from a big bank. Bless you. A large bank isn't going to be able to take the time or have the bandwidth to be able to give this kind of advice. And so I brought a couple of things with me to just illustrate a little bit about credit scores. So one of the handouts here talks about tips for good credit. So one of the things that people with really good credit do to screw themselves up is they close their open accounts that they're not using. So let's say you've got, 5 or 6 credit cards and you really only use 1 or 2. Well, people that are conservative financially might think that it's a great idea. Let's just close these ones. I'm not using them. I just really don't want to get that statement every month. It's a pain, I don't want to keep track of it, and it could get stolen, right, in today's environment. So the thing that I want to tell you is that one of the variables, especially if you have perfect credit, one of the variables is the age of your trade lines. So if you're going to close something, close the newer accounts and keep the older ones. Try to keep 3 to 4 revolving credit card accounts that are active and old. And try not to use more than 30% of your available credit. So this goes back to closing those old accounts, right? So if I'm a credit card user and I pay my credit card off every month, let's say I charge for my business, I charge $5,000 a month for my business overhead expenses on my credit card. But I've got 3 other credit cards that each have a $5,000 limit, so I have $20,000 in credit available. Well, I'm only using 5 out of 20, and that's a very low percentage, no problem. But let's say now that I go and I close 2 of those old accounts because I'm not using them. Well, now I'm using I still have $5,000 a month, but I'm using 50% of my available credit, and my credit score goes down 20 points. I've seen it happen. So part of the solution could be opening new trade lines. Part of the solution really is preventative, is just keeping those old credit cards active. Take it out of the drawer, go out to dinner, take your spouse out to dinner once a month, or and pay it off and put it back in the drawer. And that's it. And if you use that credit card once every 3 months or so, it'll stay active and they'll keep reporting to the bureaus. So if you don't ever use a card and you just stick it in the drawer for too long, the creditor has to pay the credit bureaus when they report. So I don't know if you knew that, but the creditors actually pay Experian. They make it on both ends, these guys. So they actually pay when they report, and so that's why, that's why you want to kind of keep those things going. The other thing is that if you ever make a mistake, this is something that people with really excellent credit do. Let's say you have a credit card and they charge an annual fee. And, you get the bill in the mail and it's $50 or whatever it is, and you're just like, kind of my first reaction is like, I have great credit, why should I have to pay this stupid fee? And I stick the bill in the drawer, right? Now, I don't want to think about this right now. I'll call them later and, tell them to take it off, or I'll close the card. Well, 2 mistakes you just made there. 1, don't close the card. 2nd, call them up and see if they'll waive it for you. Hey, I've been an excellent client of yours for 20 years. Can you please waive it this year? I'll pay it next year, just waive it this year. And then next year you can call them again. But if you do make a mistake and you accidentally miss making that payment because you forget about it, or maybe you moved and the annual fee comes up, this happens a lot. You move, the annual fee comes up, they're still billing, they bill you because they didn't send you a paper bill, if you had a 0 balance. So now they're going to bill, but they're going to send it to the old address. You forgot to update the address, or they didn't get it entered correctly. So now maybe you've got 30 days and that $35 annual fee is sitting on the account. Well, as soon as you discover it, call the credit card company and explain what happened, especially if it's an annual fee. they have the opportunity, if you catch it soon enough, to take that negative reporting off before it actually gets reported to the Bureau. So that's another thing that you can do, is if you ever do make a mistake, handle it right away. Because really your credit score is based on the most recent 12 or 24 months of your credit history. I brought some resources for you. If you want to get your free credit report, you can go to annualcreditreport.com. I listed the email addresses and the internet sites for the bureaus. You can dispute most things online now if there are errors. And then you can also call me, and I'll do an annual mortgage review for you, and it includes a free credit report with your credit scores. I also brought along a flyer for you with the waiting periods. So one of the most common questions we get now is for people who did have a little bit of a credit hiccup during the crash or after the crash, is how long do I have to wait for certain types of loans? And so I put together a little spreadsheet here. It's just a little matrix that tells you the different types of financing. FHA and VA, those are the government loans. Jumbo would be, in Orange County, is anything over 625, 500 is a jumbo loan. And Fannie Mae, FNMA, that is your conventional standard financing that we think of most often. So if you know somebody who's just recovering from their from a credit incident in the last few years, then these are some different waiting periods, and sometimes there are some exceptions to these in cases of major medical issues and so forth. So feel free to call me and we can talk to that person, or we can get a plan put together to help them get back into the housing market. So any questions? Wow. I did my job then. Or I bored you all to tears, one or the other. So think of JMJ when you're thinking of your financing needs. We finance anything that is secured by real estate, commercial, residential. So please think of us, and thank you so much for your time.